Welcome to the webinar Catalytic Capital, the key to additional impact, which is the second of a series of global webinars on catalytic capital from the IVPC family of networks. My name is Gianluca Gaggiotti. I'm Knowledge Manager at IVPA, and I'm very happy to be hosting the webinar together with Maria Jose Cespedes, who is Chief Product Officer at Latimpacto, our sister network in Latin America. Today we will be investigating the relationship between catalytic capital and additionality, together with an incredible lineup of experienced speakers and practitioners, which we are going to present very soon. Before that, before we dive into the conversation, Maria Jose and myself will briefly introduce you EVPA's and Latimpacto's work on catalytic capital. Please note that we would like to make this webinar interactive. Thus, please prepare your phone and feel free to drop any question that may arise during the webinar using the specific box, as we will have a dedicated Q&A session at the end. So without further ado, I'll be very brief in presenting you what we've done as EVPA and what we've worked on the topic of catalytic capital. So almost a year ago, we kicked off with a NIC talk in July, together with our sister networks. And since then, we have engaged 90 participants from more than 70 organizations all around the globe. In particular, we have hosted 5 gatherings of 90 minutes each, 5 expert-only gatherings, to collect insights from the experts and the practitioners about how catalytic capital is deployed and perceived in Europe. The discussion went on also during our annual conference and during our Impact Week in Brussels, where we hosted more than 4 sessions. And in parallel, we also started collecting cases. We have collected 17 at date, and some of which are already published and available on our website. We also hosted webinars and e-talks like the one of today and the one in July that I mentioned, and we are currently finalizing what we call as a white paper, which is a paper in which we collected all the insights and all the takeaways of the discussions with this broad community of practice. And we will soon circulate it to receive open feedback from all impact stakeholders. So before leaving the floor to Maria Jose, here is a brief overview of all the organizations that were involved in this discussion during the last year. Maria Jose, over to you for your presentation.
Thank you so much, Gianluca, and it's a pleasure to be here. Well, as Gianlu said, I'm Maria Jose Cespedes. I'm the Chief Product Officer at Latimpacto, and we're very happy to be a part of the work around community capital with our sister networks around the world. So in Latin America, we've focused on bringing the concept of catalytic capital to our network and to the ecosystem, and starting to prepare the network to deploy more catalytic capital in the region. So to do that, we've done a series of master classes on the fundamentals of catalytic capital. We've done 2 of those, where 41 participants from 32 organizations participated. We also held a boot camp that was very recent. We only finished a couple of weeks ago. 21 participants were there. It was a 7-session boot camp, so pretty intense. Gianlu, we stopped seeing there. It was a 7-session boot camp, deep diving into catalytic capital and preparing to deploy. We're also preparing to launch 5 case studies, which will be available in Spanish and Portuguese from examples of catalytic capital deployment in the region. We will have our conference very soon in August, our annual conference in Rio de Janeiro, and we're preparing a live Dealshare session focused on catalytic capital, where 7 organizations will present their initiatives. And we also had, at the beginning of this year, the presentation of other case studies around catalytic capital from members in the region. So we've been doing a lot of noise as well. Everything is available for the ecosystem to review. At the end, we will give the links to those resources. And yeah, just to to get started with this webinar, I'm very honored to have, as Jean-Luc said, a beautiful lineup today representing Europe and Latin America. So I would like to give the floor to the speakers and just ask them to very quickly, in 1 minute, introduce yourself, your organization, and tell the audience a bit about the additional impact that you seek to generate with your catalytic capital deployment. And we will follow the reverse alphabetical order. So we will begin with Yasmina. Please, Yasmina, welcome.
Thank you so much, Maria Jose. It's great to be here. Really excited to be a part of this session and the EVPA community. So I'm Yasmina Zaidman. I'm the Chief Development and Partnerships Officer for Acumen, where I have been part of the leadership team and really just part of the journey of Acumen for the past 20 years. For those of you who don't know, Acumen is really focused on solving some of the biggest problems associated with poverty by investing in entrepreneurs. And we use what we call patient capital, which I think is really aligned with the idea of catalytic capital. Most of our investing is supported by philanthropy because we are really looking to use capital as a means to find innovative solutions to some of the world's biggest problems, as opposed to really leading with the goal of creating profit and return for investors. So that's been really at the heart of our work since we started 22 years ago. And so for us, when we think about what is catalytic capital, it's capital that is really directed towards impact and designed to meet the goals of impact and the needs of entrepreneurs. What we call patient capital, obviously it's in the name, it has longer time horizons. It is committed to supporting entrepreneurs with accompaniment, whether that's coaching, mentoring, board positions, technical assistance, and it's willing to tolerate a lower return on capital, which may mean just that we're invested for a longer period of time, and we do see the returns, but they take longer than they might if we had waited and invested once the company was more mature. So we've used this approach to invest in about 150 companies, over $150 million. We've seen those companies grow and scale. We've seen them raise about $750 million in follow-on capital. And more importantly, we've seen them impact the lives of 500 million people. And we've seen that this approach to using patient capital is additional because we're essentially allowing companies to have the space to build businesses that center on people and planet. We've been able to work with entrepreneurs that are looking for solutions at the nexus of poverty, gender equity, and climate change, which our capital markets have not really supported. And we're hoping, and what we've seen to date, is that because this capital is catalytic, they're going on to source more commercial capital as they grow. And so to us, there's a role for everybody to play, but catalytic capital is really essential in the early days. I'll stop there.
Thank you, Jasmina. Martin, can you introduce yourself as well, please? Welcome.
Sure. Thank you, Maria Jose, for inviting me as well. I'm Martin Blom. I work as an impact fund developer, advisor, coach, largely but not exclusively at EVPA, so as a colleague of Gianluca. I work in 2 big projects that we manage for the European Commission, one in Eastern Partnership countries, so former Soviet Union member states, and since beginning of this year also in MENA, Middle East, North Africa, where we've just started. These projects that we run are follow-on projects of, I would almost say, traditional social enterprise support programs, often run by large NGOs, and we actually started to kind of use the capital and the grants that we provide for these social entrepreneurs in a more catalytic way. And by doing so, also creating a bit of an ecosystem in these countries around social investment, impact investment. I'll leave it at that for now. I will be going more into depth on that a bit later. Thank you.
Thank you so much. And now from Latin America, Carla, would you introduce yourself and what you do at Biguala?
Yes, for sure. Thank you for the invitation, Maria Jose. I'm very happy to be here. Well, my name is Carla Gallardo. I'm in Mexico, and I'm CEO at Viguala. And what we are doing in Viguala, we work every day to close the financial gap for minoritized groups. And that way that we are doing this, we are using a lot of blended finance to create innovating solutions to be able to really reach these groups. Our scope is Latin America, and we are actually working with women-led companies, LGBT communities. We are promoting and helping companies that are employing youth, and we are also working in general with companies that generate a social or environmental impact, positive impact in Latam. And thank you.
Thank you, Carla. And last but not least, Carlos, welcome. Can you turn your camera on and introduce yourself?
Hello, thank you, Maria. My name is Carlos Ochoa. I'm the principal of Bancolombia Ventures and also leading the impact investing area of Bancolombia Foundation. On the Bancolombia Foundation side, we are aligned on catalytic investment, and through the alignment of what the foundation of Grupo Bancolombia is, it's a financial institution that has presence in Colombia, El Salvador, Guatemala, and Panama. We help the rural development of our region through different ways that help the companies that change these rural areas in our region. We have been doing it for about three years or so. We are still learning, sometimes by the side of Acumen through their impact investing fund in Latam, and we are very happy to help the region and to be doing this for Colombia and for the countries where we are. And I will be doing a little bit bigger on the things we do through the different chain to help the companies.
Thank you so much. Well, that was amazing. We're very excited to hear from all of you. But first, we wanted to hear from our audience. So we will launch a very quick poll just to know who is in the room. We have almost 80 people connected, and we would like to know what types of organizations you represent. So if you have your cell phone handy, as Janlu asked, you can just scan the QR code there, and it will take you directly to Slido, and there you can answer this quick question. The answers will start showing up here so that we know who's present. If you cannot participate, that's very good. So we have apparently a wide diversity of organizations joining us today, which is very exciting, because what we're aiming to do with this program around Catalytic Capital is to leverage all the types of resources that can be deployed and really create systemic changes. So it's exciting to see the variety of organizations here. Okay. Good. So impact fund managers, 19%, but closely followed by foundation service providers. We have impact enterprises as well. I'm curious to know what others are in the room. If you want, you can use the chat to write who you are. And yeah, we have this other quick question before we go into the first question with the speakers. And the question is, do you agree with the following statement? Catalytic capital must generate an additional impact. As you know, we will be focusing on additionality for the questions discussing with the speakers. So it would really help to see how you stand on this statement. You can scan the code again and it will take you to this next poll. Okay. So the bar is high for speakers to make a point on how they're generating additionality through their catalytic capital investments. The people in the room are saying they strongly agree that catalytic capital must generate an additional impact. Everyone agrees, strongly or partially. So that's good. It sets us up for the questions that are coming. Good. Well, thank you to all of those who are engaging through the polls. We are very excited to start this round of conversations. I will ask the speakers one question each, and they will have around 4 minutes to answer. The questions that come up, you can start writing in the chat. At the end of the webinar, we will have time for a Q&A. But you can already start writing any question that comes up in the chat so that you don't forget. So we will start with Carlos. Carlos, if you can turn on your camera. Thank you. And yeah, good. So the question that we have for you is, financial additionality refers to situations where finance is mobilized and an investment is made that would not have been materialized otherwise. So we would like for you to share the role that Bancolombia has had as a pioneer in the sector and in mobilizing other actors in the region to support riskier investments.
Exactly. Thank you very much, Maria, for the question. So yeah, just to let you know, one of the main focus that we do is to help those companies that are not yet ready for financial services, and we help them through different chains that we have. So one of them, it's called Encampo. Encampo is a process that we do with those companies that help them strengthen and accelerate the business through mentors and through different ways that they can work and help evolve in their business. We do as a foundation, not as a bank. We do tailor-made financing for the specific necessities that the company has. So we help them, and obviously part of it is via grant or blended. Also, we do a community, it's called the Community of Negocios en Campo, that what we do is that we connect all of the companies that we have through our network, and we connect them so that they can help each other, they can sell through each other, and it would gain the most important thing that's called visibility and connection. So this way, through the blended finance, to the finance specifically for themselves, tailor-made, they do, and they understand how the financial system works, and help them evolve so that when they are a little bit bigger, they can access not only to different grants, not only to regular financing, but also to impact investors, because we do also impact, we also invest directly in those companies that go through the Encampo process. We do this kind of conversation, and we encourage the other financial institutions, the other foundations, not only in Colombia, but in the region, to do the same, because every time that we talk to one of these entrepreneurs and one of these companies that are really changing the business in Colombia and in the region where we have, we see that there's really a change. So we're not only at the the team that we are here helping them, like in the foundation, but we are 40,000 people in the whole group that have some knowledge that we put on their side, so that we can help all of these companies by different mentorships from the whole organization come and help this type of companies.
Thank you, Carlos. That's great. I mean, just involving a massive number of people like you do in Bancolombia and really making it a company-wide mission to help these organizations and to become involved in the support that you are giving in the capital deployment that you are giving to these companies is amazing, and also how you have encouraged these other financial institutions by giving them the example in the region of how this can be done, also by accompanying these smaller companies and making them ready for others to invest is definitely a great example. Thank you. Next up is Yasmina. So I would ask you to turn on your camera, Yasmina. So Yasmina, we discussed a bit about financial additionality with Carlos, but we had also spoke when we prepared this webinar about the value additionality can sometimes be even more important than financial additionality. And Acumen understands the importance of providing non-financial support to a company, their investments. So could you offer an example of the importance of building these capabilities in your investees and the results that you have seen from that process?
Yeah, absolutely. So yeah, for us, accompaniment or just really providing that long-term support to entrepreneurs is a critical part of our model, and why we think of it as catalytic or patient capital. What that looks like for an entrepreneur can take a variety of forms, and it's usually multiple forms of support. One of the places that we start is before we even invest. Because of our focus on impacting the lives of the poor, we really need to understand how a product or service or intervention is actually having an impact on a low-income consumer. So we start with their sort of theory of change, but we'll then actually validate that by going and collecting data directly from customers using a tool called Lean Data to understand whether or not their theory of change or kind of proposal for how they're impacting consumers is really playing out. And because we do this as part of our due diligence, we find that entrepreneurs that we work with, even if we don't end up investing, get that immediate value of learning more about consumers and how they're experiencing the product, whether it's having the desired impact. And that could be something like, looking at a cook stove company and seeing if it's had an impact for women in reducing the cost of fuel or time spent gathering fuel, whether it's had any impact on, other factors like health or nutrition. So again, we can sort of build the impact measurement around the desired social impact. And that's something that we continue to do with the entrepreneur after we invest. So we think of that both as a way to understand impact and the additionality around impact, but also to provide value to the entrepreneur who can use that data to adjust their model. The other big area of support that we provide is in governance. So we'll take a board seat. We typically invest equity in companies. And as a board member, a big part of our role is to continue to stand for social impact. So we work with companies that continue to grow and attract other investment. And we know that in that process, they can face a lot of pressure from other investors, sometimes to put growth ahead of impact or to grow more quickly than they can sustain based on the business model that they have. So again, as a board member, we want to support in terms of governance, and we'll help entrepreneurs to build out a really successful board that could be one that's more inclusive, that brings in capabilities that they need beyond what we can offer, and also helps bring in the diverse kind of industry perspectives that they need. And then a third piece I'll give as an example is around gender equity, which we think is in and of itself an additional value in supporting both social impact and financial performance. So we've partnered with Global Affairs Canada to be able to provide inclusion grants, really focused on meeting companies where they are and helping them to deepen their commitment to gender equity. So we work with entrepreneurs to identify a material way that they can support their business and enhance gender equity. A great example would be a company that wants to increase and develop their female sales force because they have products and services that really do have a meaningful impact for female consumers and have found that that's a better way to reach them. So we can actually provide some technical assistance funding in the form of a grant that enables them to build that capability. And we've seen really exciting results in that area. We've offered, I think, over 40 technical assistance grants around gender and have also partnered with other impact investors through some research that we did called G-Search to really see how that technical assistance is enhancing both social impact and financial performance. So I would say across some of those key areas, we think accompaniment is one of the things that makes this kind of investing really critical and supports companies as they continue to not just grow their business, but also engage other investors over time.
Thank you so much, Yasmina. That was really enlightening. I mean, just the way that Acumen has taken it on themselves to really guide, help guide these companies towards the impact that they want to achieve and bringing others on board. Just having all the experience that you have from the over 20 years that you've been working in this sector, being one of the pioneers, I think it's really valuable to put that experience into the hands of other investors that might come along and obviously of the entrepreneurs that you're supporting. And yeah, I mean, just doing so from so many different places, data, the technical assistance grants, and obviously being part of the governing bodies of these enterprises, which basically makes you a partner in the long run. So I think the additionality there is very, very clear what you're bringing to the table. Thank you so much. The next question is for Carla. Carla, if you can come up.
I'm here.
Thank you, Carla. So following on the additionality point, additionality can also come from including communities that have been systematically excluded from accessing capital and other resources. And one of my favorite things about Viwala is the very intentional efforts that you have done to target entrepreneurs from very different backgrounds and minorities. So I wish you could tell us a bit about how you're targeting these different entrepreneurs and give some examples of your work there.
Yes, for sure. You know, when you mention intentional, I think it's the key. We have to be very, very intentional because otherwise will never happen, to be honest. And what we learn is that in order to really be intentional is that we have to create like a 360 solution that help us to really reach these targets. So what we are doing, first, we have to understand the type of business that we want to found led by these kind of entrepreneurs. And what we realize is that the most of the time, women-led, LGBT-led, or companies that are working with youth usually are small companies and they have very traditional business models. So what that may create is that for sure we will give small tickets. And when we are talking about the small tickets, comes with an operational challenge. So what we are doing as a part of this 360 solution is that we are working with a tech platform. So all our backbone, all our operation is tech-based. And this is not because we are a fintech, we are not that, it's because we need it in order to be cost effective, and we are. This is one thing. The second one is that we need to think about the product. The product has to be create for these kind of communities or targets. And in order to do that, we have to be very innovative. So we have different types of loans that help us to really reach the necessities of these groups. So just to give you some examples to all the audience, we have from the most plain vanilla, which is a fixed payment loan, but we are doing revenue-based lending, and we are also doing payment awards. That is helping us to make more affordable the loans. And then this is the second one. The third one is about risk management, because at the end we are taking more. I don't like to say more risk, because if you see the new collections of Viwala, it's working very well. But it's like is a risk that not everyone is used to deal with. So in order to do that, what we are doing is that we are working with portfolios. So each portfolio is targeting a different impact theme that help us to do two things. The first one is that to really reach the necessities of the target, because if we see into the minorities, all of them are very different. So the diversity is super big. So we have to create solutions for very specific groups. So these portfolios are helping us a lot. And the second one is that these portfolios are also helping us to manage the risk, because we have different levels of management of risk. So we're putting everything together and help us to have at the end a very good result. And finally, which is the topic of the panel, the type of funds are also key in this kind of solutions, because as I mentioned, we are a blended finance fund. So we are using money from different sources. We are working with impact funds money. We are working also with family office money, foundations money, companies money. For instance, we are working with IKEA or some other companies that are helping us to reach this goal. And an important thing here is that we need to understand the use of the money in the different cases. So the more impactful or the more marginalized is the group, we will need for sure at the beginning to put more of this catalytic money. And then as soon as we are understanding how is the risk, how to find these kind of entrepreneurs, how they are paying back on these kind of important elements when we are in the business of lending, is the idea. And what we are doing is that we are moving those portfolio more to the market side. So there we are using more, let's say, less catalytic money. So this is what we are doing right now.
That's amazing, Carla. Thank you for all these examples. I mean, I know just targeting in these very, as you said, intentionally targeting companies that are led by women, by LGBT groups, etc., can be very challenging. But if nobody steps up, then these companies are never gonna get anywhere. So the way that you've designed all these different interventions and divided the portfolio, I think is very inspiring for others who are just joining in, other investors, other organizations that are looking to really go where nobody else is going, and that you're very open to sharing. That's very interesting as well. So thank you very much. And yeah, last but not least is Martin. If you could turn on your camera. Thank you. So Martin, we've been speaking with Yasmina, Carla, and Carlos about their direct support to entrepreneurs, and the work that you've been doing in the Eastern Partnership countries and the MENA region is a bit different. I would like to ask, I mean, we know Catalytic Capital can aim to cover capital gaps that are more transient, like the ones that have been described by the other speakers, or more structural, right? So I would like you to share how your work has advanced structural changes that can unlock more other investments, and your work with diverse organizations, government, etc., is unlocking that.
Great. Now, thank you for that. Thank you for that question. And when I was thinking about this question and preparing it a bit, I was thinking like, how can I best answer it? And actually, the words, how can you unlock more traditional investments struck me, because as many in the call probably we've seen there's many fund managers there as well. Unlocking traditional capital is quite an effort, and I think in Catalytic Capital there's like steps in how do you get there, right? So maybe it's, I didn't count it or prepare, but let's say it's step 10 in a range of steps you need to take to get there to kind of unlock that capital. And many of the countries we worked in are in a step 2 or 3 or 4, right? So in the beginning of it. And what you often then see is that these type of projects that we host as well is that they provide grants directly to social entrepreneurs, because social entrepreneurs are kind of there's a lot of these entrepreneurs and they do awesome work. They are scaling their companies in a difficult, often difficult environment, but they lack the capital. So these projects come in with grants, and on the other hand, there's like this awareness raising towards investors and towards these companies how to become more investable. And you have the trainings, like the awesome trainings that also Acumen provides. And you have this kind of approach to it, and we do all these things as well. We do all these things that I've just been mentioning. They're all part of the project, they're all part of the way we disperse the capital in these countries. But there's a but to it. We also decided to just start with setting up first impact fund vehicles, like experimental impact funds, to actually force is the wrong word, but kind of enable the partners that we work with and the companies that we work with to take on a more investment-like approach, so to kind of become more aware on how investors look at their company already with the early stage funding, already with the grants, and also to investors to allow them to co-invest in these vehicles into these companies. So we created this experimental funds. They are not officially, funds. I think in this group, definitely not. It's more a finance vehicle, so investors join as donors. It's often small amounts, but it allows really for development of impact investment, ecosystems and impact investment way of working with our partners. And we see already the results of this, both companies becoming more aware of investment, becoming more confident of working with money that needs to be returned, or at least partly returned, and using it in a way that they actually can scale the companies and scale the impact to that next level. But we also see that within the people that we have helped set up an impact fund last year within the organizations, we set up a fund in Armenia in December. We launched a fund in Georgia in June, and we launched a fund last year as well, a bit more fluid, I would say, because of the circumstances in Ukraine. And you see that the people that are working on these funds are already starting, to kind of get eager and kind of get the willingness to get to this next level and see how they can create funds that can actually provide a return, and see how we can make the next step on this. Now, the last thing I want to say is that we just started beginning of this year in MENA as well, as I mentioned. And in MENA, we see that there are some initiatives that's already been around for a longer time. And actually, it was yesterday that the fund that was initiated by Alphanar, Lift Ventures, announced a catalytic capital injection into their fund from USAID that actually allows them to kind of start raising for the more traditional capital investments, which is an awesome movement to see happening. But then we need to acknowledge, and I think that's where catalytic capital has a big role to play. We need to acknowledge that it's really difficult. It's taking a long time for these people to get to this level. But they are already at step 9 to start to end where I started.
Thank you. That's an amazing example. I mean, just of understanding.
I wanted to look at
the work that needs to be done in countries or regions where the ecosystem is very weak when you first come in, and the vehicles that need to be constructed in order to take them to step 10, as you were saying, right? So, for example, in Latin America, we also see countries where the social entrepreneurship ecosystems are in their very early stages, and understanding how you've done this in the Eastern Partnership countries now in MENA is very inspiring. And yeah, I mean, congrats on getting this USAID on board for the funds. I think that really just is an example of the great work that you've been doing, and as you were saying, on how really catalytic capital can drive other money to the table, and just hopefully that'll start happening in other countries as well where you've been doing the work. So that was the first round of questions. I will now turn the mic to Gianluca, who will guide you for the second round. Welcome, Gianluca.
Thank you very much, Maria Jose, and thank you to the speakers already for the great insights that I've already shared with the audience. So before we dive into the second round of questions, we actually created some couple of additional polls, because after looking at whether you're actually who you are and whether you agree with the first statement we shared, we'd like now to know to see whether you're already engaging in any form of catalytic capital. So if you could take your phone again, the new poll should pop up. So in case you're still Slido, the new question should already appear. I see there's already some answers getting in with 7 participants, but let's see if we can target the same 40 that answered the first polls. And I think it's already very interesting to see that we've had so many capitals providers connected. So we have foundations and impact fund managers that were the 2 most represented type of investors. So I'd be very happy and eager to see whether they already consider themselves as deployers of catalytic capital or not, or whether they're not so sure. But also it will be quite interesting on our side to compare these results with the results of our membership survey that we've sent a couple of years ago, because we've already asked these questions to our members, and they kind of uniformly spread over the first 3 options you see. So a third were already deploying, a third didn't, and then a third wasn't sure. So highlighting that there was also a knowledge gap that we were really happy to dive into and try to address. So let's see how the responses are spread so far. We have 20 respondents, and the majority of the people connected are already deploying catalytic capital, while there's still a non-neglectable percentage of people, almost a quarter, that is not sure. So difference is that we see there's a quite of an equal spread among the 4 options, which also makes this audience quite varied. I have a final poll for you, which is again a statement. This is slightly different, and it states that catalytic capital is what we're currently missing to tackle the gaps left by the public and private market in an effective. So that's I'll leave you the time to think about this, but be very happy to hear whether you agree with that, whether you see this and catalytic capital as one of the main tools we have at our disposal to target those gaps in an effective way, or whether you disagree with the sentence. I see we already have some answers getting in. It's great. It would be great if we can reach at least 20 respondents. I see there's 19, so let's start have a look at the results. So there's again majority agreeing with the sentence, but we have a small portion of neutral that we didn't have in the previous sentence. So that's good, but also the agreement seems to be less strong than with the sentence before, and that quite would say interesting and somehow expected. So that's great. Thank you very much for participating to this second poll as well. Before opening up to the questions from the audience, so we have already received some of them, so keep on posting the questions and we'll soon open the Q&A. I'd like to turn to our speakers again, and I'd like to start with Carlos, because yeah, I think what could be interesting to explore a bit further, Carlos, you already mentioned that in the first question, but we know that successful social enterprises do not really grow on trees, and there is a long journey that is really needed to support early stage ventures to become financially sound and also growing their impact. So could you tell us a bit more about how you are supporting these enterprises throughout the whole journey? And apart from the tools, like, do you have some success stories or cases you'd like to share with the audience that could help us grasp how difficult this may be and long?
For sure, Gianluca. So first of all, as the same name it says, it's you have to be patient, flexible, and very risk tolerant. So when we started with this structure in la Fundación Bancolombia, bear in mind that we are a foundation, so our necessity is made on helping helping the needs on rural areas of our region. So we target, like, we understood that this was a necessity as we saw like the whole area of investing, and we thought that there was a need for a foundation such as us, of a financial conglomerate such as ours, to help this type of company. So we started thinking, how can we help more than obviously money? That's one of the things that they need, but startups and entrepreneurs with only money, but with no contacts, with no possibilities to get their product, or to get the things that they're working on to the different cities, or to the different markets. We didn't do a lot. So we started as like a wide range of ideas to help the startup. So the first thing we thought was they need education. So they need to strengthen their business. How? So we did it through the access of specialized training from experts and strategic mentoring to boost their competitiveness. So it's very important, the competitiveness of these companies that are in the rural areas, that don't have like the same opportunities as the companies on the big cities of our region, so that they can keep doing what they're doing that is really well on sustainability and business impacting. So that's the first part that we do, the acceleration. Then once they have like they met the minimum criteria on the acceleration, and that we see that they're committed on their ideas, we start thinking on different alternatives. One, as I mentioned before, is the tailor-made financing, where they receive financing from the foundation to help a specific development of a specific product or idea, business idea that we have through the company. Another opportunity, obviously, is equity, but with smart capital. All of this is with smart capital, and the blended finance that I think Carla has really well talked about before, about the things that we can help, and we give them money, but we give them grants also. So, but that's not it. With all of the connections and the reach that we have as an organization, so we robust the company, we help them get to some point, but we start giving them access and connection to the different ecosystems that they need. So if it's the corporates, we access the corporate. If it's more knowledge from different universities, from different other companies, or even within our organization, we give them knowledge. If they need other foundations, they need venture capital. So we love, as I seen, and you were telling Gianluca, there's a lot of other foundations and impact investors. We love to co-invest. What we do also, as Janmina told before, we do a full due diligence that we give to the entrepreneur, so that they can work within their company to help get to the next stage. So we all do this in them. And a week ago, a new investor that was coming into a company of our portfolio said, so what are your expectations to this type of investments? What we said was, if it keeps helping the region, if it keeps helping Colombia, we are committed. We do follow-ons, and we are also on board helping their corporate governance. So we are committed full time to the company on whatever they need. And once they are at certain level that they no longer need our help or our commitment, we step aside, and if there's an exit, it's okay for us, and we take that money and invest it in the new companies that need it. So we want to be from the first, we want to be that first check where nobody is looking at them yet because they're too small and in an area that is not so sexy for venture capital, and we help them we are like the Sherpas of this client.
Thank you very much, Carlos. I think this really provides a great practical sense of how long this climb is, and also why it's needed that there's accompanying them this climb. And I'd like now to ask Yasmina as a follow-up questions. We've seen how the journey is long, but then you need to somehow mobilize further resources once they reach the peak of the mountain. And yeah, Acumen has been mobilizing resources throughout the whole spectrum of capital and supporting entrepreneurs to attract commercial investments. But yet accessing purely commercial capital remains both a challenge as well as an untapped opportunity for the ecosystem. So how do you think we can disrupt a bit the existing dynamics within the investment community to encourage greater allocation of commercial capital to impact ventures once they reach the peak?
Yeah, it's a great question, and I think one that we're all in some ways still asking. Our experience was that when we started, we had high hopes that our early investments and our support for these companies would help them tap into more commercial sources of funding, if not, purely mainstream. But as they grew, we often saw that they continued to face these gaps. And that the capital that they needed to really scale as they started to demonstrate success was still really difficult to find. So we chose to kind of stay in the game at those later stages of investment to really signal the market that we saw that potential. And we've created several commercial funds that Acumen as an organization, it's sort of an unusual approach. We're a nonprofit, but we've been able to incubate and then set up separate legal entities where we are sort of a key stakeholder that can invest more commercial capital with investors that are seeking a return as a way to really kind of push into that next level of capital and again signal to other investors. So we've set up about 3 different funds that have distinct investment thesis and often different geographic focus areas ranging in size from 30 million up to 80 million. And we're currently in the process of raising 4 additional funds because we see the need, but we also see the potential. And as we've developed these funds, we're finding ways to pull more capital into the space and also to help develop those next round of capital opportunities for the entrepreneurs. For us, the lessons in doing that work have been multiple. We are seeing the potential for growth as we've had some companies that have successfully scaled. We are starting to see exits both through our catalytic capital investments and through our commercial investments. But the big question that you asked, I think, remains unanswered because we haven't seen the massive crowding in that we think is needed. Even when we develop funds that have different layers of blended finance funds that will mitigate risk for investors, we're seeing investors that you might expect to have a higher risk tolerance really wanting to position themselves in a lower risk position in the fund. And so I think the question remains, how can investors, particularly institutional investors like development finance institutions, I think banks that are clear in their commitment the way that Bancolombia is, really help play that role to kind of de-risk for the more mainstream investors, because ideally that's what we would see coming in next, and the kind of scale of capital that's needed to build sustainable businesses that are really addressing some of these critical needs around workforce development, climate change, equity, and jobs, frankly. So yeah, I think that's a bit about why we've chosen to play across the spectrum, and why we've also chosen across everything we do to communicate as clearly as we can to investors where we see those opportunities. So I'd encourage folks to take a look. We just published a report that looks back at 20 years of patient capital investing, what we learned, where we see opportunities for other investors to come in, either in that more catalytic space to help build the ecosystem of entrepreneurs, or at the next stage in early growth and growth stage with companies that are going to be critical in our work to build a more sustainable and inclusive world. So the space is wide open. And I think what's exciting about this forum is that I think it's this sort of insight and seeing the experiences across different kinds of players that could hopefully bring comfort to other investors to take that leap of faith, to step in, get involved, because the water is warm here and it's actually an incredibly exciting space to be in. I apologize that I have to leave early today because of another commitment, but a colleague of mine, Hannah Wheatley, is going to be joining to support the Q&A piece of the session. But I just want to thank everyone again for your questions and for this opportunity.
Thank you very much, Yasmin, for sharing these great insights with the audience and with us. We're very happy to have Hannah taking some of the questions that have already been posted in the chat directly to you. But yeah, I think these are great insights, and I think Acumen is one of the pioneers in this sector. So it was great to hear parts of your learnings, but also encouraging the audience to have a look at the report if they're interested in understanding more about and learning more about those learnings. Thank you very much, Yasmin, for your contribution. And I'd like now to turn into Martin, because yeah, it's still I think quite interesting to see how can Catalytic Capital play a role in building an ecosystem from zero, but not just the how, but it's really understanding what is the approach that we try to follow that as EVPA in these partnership countries and MENA region to make the most out of the resources at our disposal, because we would have chosen to deploy them in a different way, supporting projects directly with grants, but we sort of decided to be a bit more catalytic. Could you tell us more about
Yes. No, definitely. And I think to this question, there are two things to realize before answering. And I think one is it's never really zero. So when we enter these countries, there's always things happening. So indeed, in some countries, the ecosystem and definitely the funding ecosystem is quite nascent. But there's always already a lot of things going on. I just mentioned the example of the impact fund in that is set up from Lebanon, actually, the Lift Fund. But also active in Egypt and Jordan. That is quite advanced already, and I don't want to take credit for that with our program that's just started a half year ago. That's really their program. I think a second thing to realize is, of course, that all the countries are very different, and it's very country specific on what is going on in these countries. So. In some countries, we saw, for example, that there's no impact investment as we know it in the West with formal structures and things, but there's like centuries of tradition in co-funding ventures that provide services that are of common interest. Let's call it early day crowdfunding. What's going on over there? In other countries, we see that there's quite an active ecosystem, definitely around ventures and social enterprise. But it's very donor driven, very led by NGOs. So you see that there's one is like the stage where they are in kind of building the ecosystem, and secondly, there are very specific characteristics per country that you need to take into account, and that's why we started this project definitely in MENA with first a half year analyzing what is exactly there, who's active, who's working with our partners, who's active next to our partners, where is this ecosystem at before deciding where we could add value to what was exactly the plan. So we didn't want to come in on purpose. We didn't want to come in with this blueprint on, yeah, this is a way to work and this is a way to do it. We really want to kind of work demand driven. What is the demand that is in the society? What is the support the demand that our partners locally and the ecosystem locally has. I think the difficulty is then if you come in as an organization based in Europe into these regions, is that how do we know what is exactly going on? Why do we think we know what is needed? So we put a lot of emphasis on and a lot of responsibility with a lot of trust back to our local partners that can actually spend that money in the way that is best. That they think is best applicable, that they think is best applicable in their country, is working best in their country, and the only thing we have to do is kind of help guide them and connect them to other players in the ecosystem, and that's very different, of course, when you are a fund as Lyft with catalytic capital from USAID and now getting into further into the market to also raise capital from private investors. Than in a country where you really want to kind of raise awareness locally from local investors with the first experimental fund. So how do we provide capital how do we make it more efficient? It's really to kind of deploy more money locally and we manage it with a very small team, not even from Europe. Actually, half of our team is also local people. So that's how we do it.
Thank you very much, Martin, for sharing your insights from MENA and Eastern Partnership countries. And I think you said something. I mean, all of what you said was interesting. I really like the idea of understanding the ecosystem and not having the silver bullets, but tailoring it to the needs of different countries and engaging stakeholders to understand the gaps. Because this is, I remember actually moderating a session in Brussels with Hannah from Acumen, talking about how important it is to not come with flow of money that doesn't really reflect the needs of the ecosystem and the organizations really active in the field. So I think that's a very crucial element of catalytic capital. Thanks for stressing that out. I'd like now to ask Carla to join for the last question, and then we open up for the Q&A. So in case you have some questions, this is the moment to keep on dropping them in the questions panel. But before that, Carla, I think what we can learn from your experience is that, and that I'd like you to elaborate on, is that once that catalytic capital is really crucial to test solutions once are identified, because once a specific unmet need or gap is identified, then solutions need to be tested, developed. There has to be resources there to do this. How can, in your view, catalytic capital be an effective tool to incubate these solutions?
Yes, you're right. It's key. This type of funding is key to really try new things. What we are doing at Viguala is that internally we have a methodology that we call Impact Lab. And in these Impact Labs, what we do is that we take the advantage of this tech platform that we use to operate to test different products for very specific impact themes. I like to say that usually I say that we use the Google methodology. As you know, Google every day is taking the advantage of their platform to launch and test different products in the real market. And then sometimes some of those products just stay for one day, and some others for months, and some others for years, and some others they get launched to the real market. But we are doing this exactly the same, but for taking different impact themes and different combinations of products with the idea or with the target of really find the right solution for these specific groups that we are working with. And in these impact labs, the catalytic funding is very important because has to be patient, has to have risk appetite. And another important thing is that the ticket is very important here because we don't want a lot of money to do a huge pilot. So what we are doing here is we are doing small pilots, but we need also small tickets to put and to try. And what we are looking in these impact labs is that we are testing product, we are testing how to reach the target. This is very important. When we are working with minoritized groups, it's not the same targeting women-led companies in Mexico, rather women-led companies in Guatemala, or LGBT communities or trans communities of all. It's very different. And then we are also testing in this impact labs that I mentioned the risk, the finance structure and the risk level. Because what we are hoping and what we are doing actually is that after spend a time in this impact lab, we are able to bring that solution to an scaling stage. And in this scaling stage, we are able to go and bring private investors. We are able to deploy in with a more growth strategy, and actually it's what we are doing for several of our portfolios already. And for us is working very well. But what we are learning is that here the need of catalytic money is key. And usually what we are seeing is that catalytic money that is coming from private sources, because this type of funder has a flexibility to be patient, again, to take this kind of risk and to be able to put different little amount of tickets in different topics that allow us to do a lot of testing.
Thank you very much, Carla. I think that was a very interesting to observe how does that testing solutions and labs work in practice, and how it's powered by Catalytic Capital. It's definitely needed to test new solutions and address gaps. So thank you very much for your contribution. I'd like now to invite all speakers to join me, let's say, for the Q&A that we are having. So we've seen already some questions. So before I maybe also leave the floor to Maria Jose to ask some questions that were drawn by the audience, I've seen just a comment of Jesse that I would like to take myself, which is asking whether Catalytic Capital is applicable to Western markets, EU and US as well, because most of the funds, is true, here today are not active in Europe. The answer is yes, definitely. There are a lot of gaps. There's a lot of need for Catalytic Capital in Europe. And yeah, we had to select, let's say, the investors, mixing a bit the different contexts where they're based and where they're active. But we have plenty of cases already available on our website on how Catalytic Capital works in Europe, and we are definitely, you'll see more in the website soon, and also in the white paper. So yeah, happy to take that conversation forward, Jesse, if needed offline. And then, yeah, I've seen there's been quite a few questions addressed. Maybe I can start with one that is addressed to Yasmina, but we have Anna here. So first of all, welcome Anna. Thank you very much for being here. And there was a question for you on how do you measure investor impact, and what are the biggest challenges with measuring investor impact, so impact at investor level at Acumen?
Thank you so much for the question. I'm smiling broadly because opposite me, but you can't see her, we have Dr. Julia Mensink, who is our head of impact. And so she would be the perfect person to answer this, and she will hear my answer and give me feedback later as to whether I'm answering it accurately for Acumen. So Acumen has a really deep commitment to impact. We always have, and it's crucial that we are measuring what matters to continue to find efficiencies and deepen and broaden the impact of our work. Acumen has quite a long story with the development of our impact frameworks and strategies and findings, so I definitely won't go over all of them now. But just to say that a number of years ago, we actually had to develop our own way of kind of really understanding the impact that our investments were making. This methodology was called Lean Data. So this was a really light touch survey approach that we used to reach out to customers directly, to hear from them about the differences that products and services delivered by the companies we're investing in, whether they're making a true difference to their lives. This was a really helpful tool also for the companies that we invested in. It provided them with an additional layer of visibility into their customers' needs, and often supported them to really pivot and develop and think about providing new offerings and understand more about what their customers wanted. We got a number of requests to actually deliver this survey approach to other impact investors, which led us to actually spin this out into its own separate entity called 60 Decibels that some of you may have heard about or maybe even contracted. Acumen still contracts with 60 Decibels. We still deliver this Lean Data approach, but that was just one tool within a much broader kit that we use to really understand our impact. Something that Julia always says is that we need to do more with less. So rather than going down rabbit holes of endless data collection and measurement, really making sure that we are really using the data that we have to really support us to try and pivot where's needed, or just really take a closer look at where there might be kind of crucial challenges that we need to look further into, or use it as an opportunity to compare across different regions, like why are we reaching so many women through energy in East Africa, and why aren't we quite doing the same in other regions and other parts of the world.
Thank you very much, Hannah, for your answer. That was great, and hopefully you received good feedback from the head of impact in front of you.
I had a thumbs up, so I didn't say anything wildly wrong.
That's great. So yeah, I've seen there's other questions that are directed to whole speakers. So maybe I can pose one, which was posted by Herrick, and is asking you a bit what is the relationship that you see between impact and profit? Is it somehow dualistic? So does the positive impact usually come at a cost of profit, or is it more complex than this? I don't know who would like to take it first, but striving for a volunteer here. Carlos, do you see you're about to speak? So do you want to go first?
No problem. I think that if you do the things good, and you help the company, you can have both. Like it's not necessarily one or the other. There's a lot of companies that are doing a lot of impact, a lot of good things, and they're profitable, and they're doing their rounds, and they're doing their way through the different series. So I don't think that you have to choose one or both. Obviously, for us being a foundation, and now on the foundation hat point of view, for us is first impact and then returns. That's the most important thing. But I think if you do both, like if the company is doing the things well, like as every entrepreneur, that they have their mindset, they're solving a need that has product market fit, that has like all of the process that have to have as a regular entrepreneur, profitability will come. I don't know if my co-panelists have any other things or want to complement.
I can complement. I totally agree with Carlos, and I think it depends on the industry. If we talk about alternative energy, rather some solution to solve the poverty, for sure is very different. But what I think, so you can, just to answer quickly, in order to, we can found impact companies that are generating very good profits. But I think that we need to change a little bit our mindset, and we need to start thinking how to really create value, economical value coming from the impact, because at the end there is a cost in generating impact. It's like producing something. Just even measure the impact, that everyone is looking for that. How to measure the impact is a very common question. That has a cost, and who is covering that cost? So we have to start, in my opinion, thinking of impact as a liability and more as an outcome. Like an outcome has a value, and we need to start trading that outcome. So I think that should happen in the near future.
Thanks, Carla. I have a very interesting question here. It's more of a challenge for all the speakers. It's from Peter, and he's saying, is it the case that trying to solve all market capital gaps by using market-based solutions or approaches that cause them in the first place is impossible? With that in mind, rather than more de-risking to pull in investors, etc., should catalytic capital be used to challenge the systems more, advocating for different approaches and changes in the mainstream markets? I don't know who would like to tackle this very interesting question.
Yeah, happy to have a first go at it. By the way, I always like panels more when people disagree, but I fully agree with my two previous speakers on the previous answer. And it actually relates a bit to somehow relates a bit to this question as well. And I fully agree with this statement either also, because I work a lot with early stage funds, and you see a lot of these early stage funds come up with solutions that are really innovative and kind of really bring like can really kind of ignite systems change and really a different way of looking at how finance can provide solutions for the great transitions that are in front of us. And they find a lot of trouble fundraising and getting the money together because they are so innovative. It's almost comparable to the startup ecosystem, where the most innovative companies have the most difficulty getting the money because they look at it traditionally. So definitely, if catalytic capital can play a role there to invest in markets that are underinvested, like Lebanon I just mentioned, or in kind of topics that are less known right now with the larger investor community. I was at the session around water this morning, which you would say is quite commonly known. It's going to be a big problem in the future, but still it's kind of under knowledge how you can rightly invest in that, and then it adds to what's discussed before, right? So can we also take the cost? Can we also take into account the cost of inaction as compared to the cost later to kind of get a response to it, and probably the cost of inaction will be higher. So there's another different way of looking at the investment cases.
I don't know if someone wants to complement that, or we have several other questions here for the speakers.
I'm happy to just jump in for a minute. Just say I really appreciate the question, and I think it's a good pushback, and I think something that comes up quite a bit in these panels and spaces that we occupy, including Rent Activism, really recently at the School World Forum, and talking about carbon markets is another kind of interesting question that gets asked. So I think talking about patient capital, which is where the alignment is with catalytic capital, here, I think in the kind of early and mid 2000s, we're reframing this as capital to fill a stage-specific capital gap for social enterprises, and this has been quite dominant in the public framing of patient capital over the last decade or more. And I think we've really understand this framing to be partially correct, yet incomplete and insufficient, because to solve the most pressing challenges, we do really need to think about the role of patient capital more expansively and think about a range of entities and business models that go beyond high growth models, and look at different pathways to and partnership to scale. So not just looking at those really market-based solutions. So that they all, what that still remains the kind of commonality amongst all of this is the need for impact orientation, patience, and return threshold flexibility that patient capital has, and catalytic capital typically has the characteristics of.
Thank you, Carla. Thank you, Hannah. We have another question that was posed for everyone, but I think Carla could also answer these. So Alvaro was asking, what is the minimum amount of money with which you can do catalytic capital? So Carla, maybe you can tell us a bit more about these very small tickets that Viwala is experimenting with. Did Carla?
Sorry, I disappeared. I'm here. I pressed the wrong button, sorry. Yes, for sure. Hello, Alvaro. What we are trying to do is to be the first option, to be an option, not the first one, to be an option for those investors that are trying to enter in the impact field. Because I understand that maybe they want to enter with a little thing in order to understand how it's going on. So we are doing from 100,000 tickets from the investor side, and then we are allocating our tickets are going. They are very small to the clients. We are doing from 10,000 to $500,000. So because the companies that we are targeting are small companies with very very traditional business models. So we're taking from 100K.
Thanks, Carla. And there was another question from Francisco that I think just wraps into this one. He's saying, as an impact investor, I feel that it's very difficult to raise catalytic capital. And he's saying, as grants in Latin America, even with a constant track record on SME lending. And are there any tips on how to help organizations bring more capital to the ecosystem? So as impact, the question is regarding raising funds, but by impact investors. I don't know, Carlos.
Sure. Let me get the first kick about it, and I would love to hear Hannah and her remarks about this, because I think there's no tip. I think, as all of us know, the venture capital system right now is a little bit difficult than last year, and impact investing also. So I think you have to as an entrepreneur, you have to manage the time. What we have seen, and it's no different from impact from other type of venture capital entrepreneurs, manage the time. Time is not easy to get capital. So before you could, I don't know, sign and raise in 6 months. Right now, 6 months, it's a utopia. So it's very important to have your organization in how much money, how much runway do you have, so that you can organize, be constant on it, have all of the, like, what we do is that we manage the contacts of the different funds and the different organizations that are investing, so that we can help the companies from our portfolio. But that's obviously my point of view, because I think we have a little bit easier than certain funds, because I have one LP and I have money each year to give to the different companies. So that's my point of view on, you have to be organized and you have to help what we do is we help the companies with the context. So we are with them. We don't leave them alone. We are with them so that they have like a brand behind them that has a lot of recognition in our region, and we take them all the way to see if we can manage the checks that they need. As Carla was saying before, we also help them with checks. So sometimes we'd rather have smaller checks at first, but do the follow-ons once they need, and because we know that there's need of resources along the way, not only at the first time. So that's what we also help with that follow-on checks, so that we align with other investors. But I don't know if Hannah, Martin, and Carla want to chip in on this question.
Thank you for bringing me in. Sorry, Mary, could you just repeat the question for me? There was quite a bit of noise outside, and I don't think I caught the full question, so I just want to make sure that I'm answering appropriately.
Of course. So what Francisco asked was, as an impact investor, I feel it is very difficult to raise catalytic capital, even with a consistent track record on SME lending. Any tips on how to help organizations bring more capital to the ecosystem?
Yeah, it's such an important question. I think, Acumen is an NGO, so I would even share that it's also a challenge for us to continually raise the capital that we need to in order to make those big, bold bets. And, our model is as such because we want to be able to invest in organizations that have the sharpest focus on impact. And that's, we have the flexibility and freedom because of the philanthropically backed. So the environment is challenging, it's competitive, and so I think I can talk from a position of solidarity and empathy to a certain extent, because we're also fundraising continuously. I think the most important thing is really the values alignment, and the track record is obviously important, and it's still challenging, as this individual mentioned, despite all of that. But really thinking about broadening the communities that you're a part of and the networks that you're a part of, making sure that you're joining hands with others, organizations like Acumen. One of our key roles really is to raise unheard voices. Every year, for example, we take a cohort of folks to TED. We support them with accessing pro bono support from consultants like Bain, or access to angels funding and other things. So just ensuring that you're kind of really connecting to the ecosystem and with organizations who are really actively trying to raise unheard voices, really actively trying to connect unrepresented founders who are working on really tough challenges, and connecting them with the right type of values aligned capital. And I guess also just holding firm within your values, not feeling compromised, you have to accept investment from folks who might take you adrift of really where your mission is focused and where it lies. And yeah, so I guess more of just a voice of solidarity.
That's great. Thank you very much, Hannah, for sharing also your final insights on this last question. I think it's really looking at the time for us to wrap up and conclude the webinar. So thanks to all of you who are still connected with us. We'd like to share just a couple of extra materials. You'll find these slides available on our website very soon, but just to mention that there are more materials, more to come about Catalytic Capital. So stay tuned and keep on following us. It has been a great pleasure for us to host this webinar. I wanted to thank you, all the speakers, and Maria Jose for moderating and also contributing to these great discussions. I think we need more of these discussions, and we're very committed as EVPA to host more in the coming months. And yeah, I leave you the floor, Maria Jose, if you wanna say just a final word before we conclude.
Oh, thank you. Thanks to all of our speakers and to everyone who was here. It was a pleasure to start my morning like this. Thank you so much.
Thank you.
Bye.
Bye.
Thank you.
Thanks for the time.
Thank you. Have a nice day. Ciao.
Bye, thanks.